Uh, Despite the environment where yields are high, do you think this is still good? Inflation is one thing, interest rate environment is really high. Do you think these companies, in particular the industrial segment, are making good use of these? Do you think these debt papers are well priced and the yields on them?
Well, yes. I mean, you can only operate within the context of the environment. I do agree that the yields are high at the moment, but we've also seen periods where yields were low. So even in 2018, for the companies that came to the market earlier in the year, they managed to save about 3-4% compared to where we are at the moment. So it's also a function of timing. If you time this well and you're able to access market, when yields are low, you get the benefit of locking in for competitively priced funding for a long time.
Okay, so for those who's making the best of these domestic Naira bond market on the corporate side, more of industrials, less of the banks we've seen in recent times?
Well, yes. So today, I mean, which is, I guess, the subject of interest, Flour Mills of Nigeria PLC is listing its corporate bond recently issued on the FMDQ. Flour Mills raised 20.1 billion, split between 3-year and 5-year bonds, and the pricing for the 3-year was at 15.75%. For the 5-year, it was 16%. And if you look at where yields have been over the last 5 years, I think it's you would say that it's fair pricing to raise long-term debt capital. We've seen a number of issuers actually come to market this year. We've had, on the bank side, you've had Sterling Bank, you've had Union Bank, and then Stanbic IBTC as well. And then we've had 5 corporates, NMRC, which is actually a Supra. You've had Mixta, you had Mixta Nigeria PLC. You had and a number of other corporates actually that came to market, in 2018. So it's basically, again, as I was speaking to earlier, confirms that the debt market has come to stay. It's a source of funding that all corporates looking for sort of long term should be considering going forward.
Well, if we look at the market, Flamings, for example, and Lafarge Africa also approached the market consistently over the last 2-3 years. Why do you think this is so? Does it have anything to do with the attractiveness of the market? Is it because there's a bit of a concerns about consumer demand? What is it that will make companies like this come repeatedly almost every year or twice a year to do a debt raising?
Well, I think for the corporates, firstly, they are planning for the long term. A lot of the sort of volatility we see now, I would say, is short-term related, and there are concerns around, what's going to happen between now and an election in terms of the market rates, etc. But for a company who has been here for sort of decades, if you are thinking of long-term expansion, you think and look beyond these sort of short-term situations. So if you see a number of corporates taking advantage of this, it's precisely because they're looking at the long term and effectively trying to hedge themselves from a cost of borrowing perspective.
Okay, so what's the case for Flamings, for example?
So the case of Flour Mills raising 20 billion, has raised 20 billion, I beg your pardon, which is being listed today. It's 3-year and 5-year, and they're being used, for refinancing debt as well as expansion. So again, if you look at the tenor and then the rates, it speaks to the company's long-term intentions in the market.
Kobe Bensi Encheo, the Executive Director and Head of Debt Capital Market at Stanbic Capital. Thank you very much for your time this morning. We look forward to see you some other time. Let's move on to review the market for you. Yesterday, this were bears snapping at the heels of Santa Claus that I thought 2 days ago was already here. Some folks says I got a little bit too happy. Then the market snapped after 2 days of a bit of a strong rally. Then we saw a negative 1.07 on the stock market on Thursday. That's spoiling my mood. We're now below 30,819.1 on the composite index reading. And of course, the equity cap sank to 11.251 trillion naira. But in terms of trading activity, we're just a little bit on our daily average of total volume. Take that away. Bring in the second page. Thank you. You're looking at 280.9 million ordinary shares for 2.49 billion naira in 3,000 transactions. That is consistent for what the market does when investors are a little bit active. But again, what are they active about? Look at the sectors. The 5 main sectors on the NSE, and this is coming through. They were active in the banking sector. Of course, they chopped off nearly 1% on the banking index. Consumer goods was shaved by 0.27. Industrials, we're talking about that, those folks a bit earlier, 1.61%. These are big cap companies on the market, and those ones are the ones taking the heat the most. Consumer goods, you talk about the big names, Nigerian breweries, Nestle, can't be the rest of them. And of course, you have the industrial goods, Lafarge, Wapco, CCNN, Dangote Cement, of course, the big boy on the market space. Then you look at insurance, sidestepping the red paint on their senior cousins, the banks, and taking their green back about just 1/4%. Oil and gas was a bit stronger, the strongest gain we saw, 0.5%. What's that story all about? Perhaps, and that's perhaps because perhaps of what you talk about, the petroleum marketers being reassured by the administration, they're getting their 800 billion naira. That meeting was concluded yesterday, and there'll be no petrol scarcity or petrol product scarcity during the holiday season. So, perhaps that was what was responsible. Because if you look at the oil and gas page, and move it up there, folks, let's see, it was largely lackluster with the exception of Owando, that integrated energy trader, trading nearly 5 million shares. That's quite significant if you're looking at volume, tracking the volume in Owando, and getting 4.04%. The rest of the oil and gas companies were largely muted. Just a quick one, and I'm moving straight to the unlisted securities market, just shy the NSE. That's the NESE over the counter, 0.75% in the negative territory. We're down below the 710 USI reading, 708.05. But of course, in terms of transactions, that's quite good. 122.053 thousand unlisted securities. Let's take a break. We'll be right back. We're still talking about the market. This time, it's more about financial inclusion.